Hello, welcome to Financial Insider Weekly. I'm your host, Michael Gray, CPA, and my guest today is Craig Martin, partner and certified financial planner with the Family Wealth Consulting Group.
Thank you, Mike.
Hi.
It's a pleasure to be here.
I'm glad you're here today, Craig. Thank you very much for being with me today. And I want to show everybody your book, Craig Martin on Asset Class Investing. And if you'd like to get a copy of this book, there'll be contact information for Craig Martin at the end of the show. I'm sure he'd be glad to get you a copy.
Sure.
Okay. Well, today we're talking a little bit about choosing a financial advisor.
How does an investor know what to choose for a financial advisor?
Right.
Good.
And so there's a lot of money out there that's writing all this, a lot of things in the press and so forth. We've had the big companies, of course, some of them have even gone out of business in the last year or so.
Amazing.
Kind of scary.
Just amazing.
Really, I guess some of us would like to know, what's the difference between somebody like you? You're a fee-only financial advisor.
Fee-only, yes.
And you're also, again, a certified financial planner. So what's the difference between that and going to like a stockbroker or a fee-based financial planner?
Okay, good. Great question. Absolutely, investors are desperate to find somebody that they can trust in the marketplace that can give them the advice that they need. It is my firm belief, Mike, that if they hire a professional, they're going to be much better off. I'm biased. I think they should hire a fee-only advisor. Let me try and explain the difference. The marketplace got started 100 years ago with people selling stocks. That marketplace evolved over the 60s and 70s, stockbrokers were finding that working with the large wirehouses was not comforting to their soul. They wanted to give more advice and counsel to clients, so they broke apart from the brokerage firms, the big wirehouses that you may be familiar with, and formed their own companies in an effort to be able to give the kind of advice and counsel to clients that they thought the client needed rather than what the big company wanted them to sell or to say. That has evolved into what has become the fee-only marketplace, and by law, the 1940 Securities Act separates out the fee-only advisor from the commission broker. So I'll create the two terms, fee-only advisor and commission broker. It means that as a fee-only advisor, I've given up my license, as did the originators of this part of the industry, given up my license to sell a commissioned security. I cannot receive a commission from selling a security. I work exclusively for the client. So at our firm, what we say is that we work for you. Our sole dedication is to make sure that you get the best advice and counsel. And the brokerage side is, for the most part, selling product. They're trained to sell product. I think that's a necessary part of the marketplace because sometimes there are products out there that can assist clients and should be sold. And I like that the brokerage industry exists, and I think it should continue to exist. But for those clients who are looking for fee and for advice and counsel, my suggestion is that they work with a fee-only advisor. Interesting development has occurred in the industry. Mike, a little history for some of the viewers maybe. About 6 years ago, the Securities and Exchange Commission allowed the largest wirehouses to avoid that 1940 Act that I spoke about earlier and act like they are a fee-only advisor. And the professional industry association that I'm a member of, Financial Planners Association, sued the SEC to cease and desist from that administrative behavior. And we won that suit in early 2007. We thought it was going to create a clear distinction between fee-only and commission. When the 1940 Act was committed, it was was written, it was real clear that there needed to be a distinction between fee-only and commission people. And we thought that having won our lawsuit, it would again create a big distinction, and that did not occur. It turns out that the new president does want to create that distinction in the marketplace. So there is a new law going through Congress right at the moment that is going to create a fiduciary requirement from the fee-only advisors and the brokerage community. If that law goes through, then the two communities will have the same responsibilities towards our clients. That is, we must act in their best behavior.
Their best interest.
Their best interest, excuse me. Currently, the fee-only advisor has that fiduciary responsibility. We must act in the best interest of the client. The brokerage community has a suitability requirement, which is quite different, quite loose, and of not the same quality as our fiduciary requirements. Mm-hmm. So it'll be interesting to see how the new law comes out. Mm-hmm. Momentum behind the new regulatory movement, and I'm thinking that a new law is going to come through, and if it makes both the fee-only side and the brokerage side have fiduciary responsibility to the client, I'm not clear how that's going to work, but we'll see.
Yeah, well, if the broker is commission-based and the company, in a sense, is commission-based, then there's always going to be some sort of conflict of interest, isn't there, between the brokerage firm?
Well spoken, yeah. Yeah, you brought up the company. We'll call the large wirehouse a manufacturer of securities or financial products, and then they hire a sales force to sell it. That's the brokerage community. So the broker is working for the manufacturer, the large wirehouse. We're working as a fee-only advisor. We're working for the client, directly for the client. Mm-hmm. I receive as a fee-only advisor, I cannot receive any income from the corporation. So yes, when that broker sets up what's called a registered investment advisory firm, mm-hmm. they can collect fees or they can sell a commissionable product. And then they're in between these two worlds. And they're called fee-based. Mm-hmm. So a fee-based broker can sell a commissionable security and or collect fees from the client. Mm-hmm. As a fee-only advisor, we cannot sell commissionable securities and can only collect fees. So we say fee-only versus commission-only versus fee-based, mm-hmm. which is kind of in the middle.
Now,